Let's welcome in a very special guest now, Sunil Khaitan of Bank of America Merrill Lynch, India Head Global Capital Markets. You rarely get to see him on TV. Sunil, there has been an interesting transaction about a REITs listing. Can you just talk to us about the REITs appetite? We also now are getting news that Tata Power may be looking to, launch an InvET. So, these kinds of products, when you go to market to some of the investors, when companies come to, list them for you, what is the sense you're getting? What is the traction that is coming into these spaces, especially considering interest rates are going down?
Hi, very welcome to all of you. I would say first things first, it's very important for me to differentiate InvIT from REIT. I think just in terms of the basic structure, basic product, a REIT is a very different animal compared to an InvIT. And again, I think from an investor perspective, it's also kind of really, really important to understand. Let's just delve into the REITs first. Of course, REITs provide you an opportunity whereby you have stable income generating assets, which are typically in the nature of commercial real estate, which are offices, etc., which are put under a trust structure. There are various regulatory guidelines which are put against it, which basically means that in terms of any transaction that the REIT is looking to do, whether it is in terms of acquiring new assets or in terms of distribution of dividends, all of these are highly regulated. So that gives a lot of comfort to the eventual investor to actually put his money into a very stable, certain income generating asset. Now, in terms of the way the REITs are structured in India, I would say it's been a super welcome development because the real estate developers who were actually sitting on these assets had very limited way to recycle capital. And again, what REITs have done is that they have provided an avenue for the public market investors, the global long-only funds, the domestic high net worth individuals to actually get a part of that action. And I think they have welcomed the opportunity from both hands because India real estate remained a sector whereby the appetite was there. There was a lot of keenness to invest. However, structurally, it remained a sector where the transparency was low. There were concerns around corporate governance, etc. And again, REITs in some way fit right into that picture. And again, suddenly, in a space of 18 months or so, you see that the India REIT market cap is close to $6 billion, which can almost be kind of 50% of the total real estate market capitalization, and just two deals done. So we feel that there is a lot of opportunity in the sector. We feel that there are a lot of good quality income generating commercial real estate assets, right, which can be put into these structures.
Right. Sunil, also, that's of course, what you're talking about, the real estate pack. Now, we had Phoenix Mills fundraising yesterday. We have earlier seen some of the other, retail, mall, or maybe real estate companies going ahead with fundraising, normal equity fundraising. And also the banking space, what is the appetite that you're seeing, when you talk about these fundraising activities? Some of these, like, Axis Bank, I know you cannot take names, but, some of these are really big. I mean, you had $3-4 billion of two different deals coming in 2 days. What is the sense you're getting about overall fundraising equity activity?
I would say, again, you can remember one of the quotes from Winston Churchill, who said that never let a good crisis go to waste. I think this opportunity that it presents itself, I think you are finding India at crossroads in some ways from a global investor's perspective. You are looking at a global investor which is saying, I have issues in terms of going deep into China now, given the global perspective that US has around US, around China. And then you have a picture whereby how can I deploy a large size of capital, which I may be forced to take out of China. Just in terms of over the course of the last 4 months or so, around $6 billion has exited China. And again, India in some ways is providing that opportunity, especially with the slew of large capital raisings that we've had, providing an opportunity to avenue these funds in a very productive manner. And I think that's the key part here, because the fundraising activity in some way has to be determined by 3 parts. One is, of course, you think about growth capital, regulatory capital in terms of the banks needing to maintain a certain capital ratio or a certain buffer against it. Second comes deleveraging, which I think is really important in the context of where we find ourselves in course of pandemic, but also in course of where we find ourselves in the economic cycle. And then you come to the monetization, deals like a Bandhan Bank or in terms of GSK looking to sell in the Sun Unilever stake. So that's the kind of slew of different kind of capital raisings you see. And I would say that the investor appetite across the spectrum has been very, very strong. When we look at the fixed sector itself, we have seen close to $12 billion get raised. We're not talking about just the last week or just one transaction, but if you look at it, the fixed sector overall, you've seen close to $12 billion get raised. And again, that provides you a perspective because that's equity capital, and that has a multiplier effect in terms of how these banks are going to go out and lend to the real economy. So we feel that the activity will probably accelerate.
Right.
You're definitely seeing activity percolate to the mid cap now.
So, I just had one quick follow-up question. You've covered most of the aspect of fundraising, but something what probably, Reliance Jio has done, or, some activity that you're seeing where KKR or any other big company like Carlyle has just gone ahead and invested a substantial chunk and taken over the company. Do you expect this e-commerce frenzy to continue especially in the private sector deal? And secondly, PE buyouts. Is that something which you're looking where activity will only increase?
Definitely. I would say the PE players actually are sitting on chunks of capital at this point in time, all through the pandemic and coming into the last couple of quarters. I would say that the public markets were providing enough opportunities for companies to actually go out and raise capital. However, over the course of the pandemic and now when we are coming out of pandemic, you will see that the public market activity will be kind of very accelerated, but it will be in some ways limited to the large liquid, maybe in the mid-cap, really well-governed companies, because a public market investor has a pick of what he can go in. From a private equity perspective, I think it is providing a lot of opportunity from their perspective to deploy chunks of capital into good quality companies which really need capital. And again, in terms of buyout activity, I think that's only going to increase because you do see a lot of liquid capital staying with these large buyout firms. And again, that firm number also kind of continues to go up because a number of these firms have raised capital coming into pandemic, which they are now looking to deploy.
Okay. Well, Mr. Khaitan, this definitely was quite an insightful chat. Thank you so much for joining us today and, bringing all of this into perspective for all of our viewers.